are effectively only federal debt. So when they created the euro, the problem was there was no federal central debt. So to be politically correct, they all had to have a piece of everybody else. So essentially, as Greece goes down, Portugal, Italy, etc., you're talking about undermining the reserves of the European central, of the central banking system as a whole. So, you have banks that weren't even into derivatives per se in trouble. I mean, like in Italy, etc. So Deutsche Bank was extremely aggressive on the derivative side. They lost a fair chunk of money on the 2007 crisis, and it's been really a progressive decline. They've been trying to reduce as much as possible, but Merkel's staff came out and said no, there will be no bailout for them. And so, the stock has fallen almost 10% just ever since. So it's really in a serious crisis here, because you have to realize that Deutsche Bank is not only just the biggest bank of Germany, it's effectively the Cadillac of Europe. So it's not looking good. The whole European situation it's just a real disaster. They came to us when they were creating the euro, and I told them flat out right back then. I mean, I've published it. It's over the web that it would fail. I explained to them that you had to consolidate and create a federal debt. Otherwise, the euro could never compete with the dollar. And they said that they were afraid to do that at the time. They just wanted to get the currency through, that if they started talking about consolidating the debt, it would be seen as a bailout for Greece or Portugal, etc. So they left everybody with their own debt. And that's been really the Achilles heel to the whole thing. They said they would eventually get back to consolidating the debt, but they never did.
Merkel said she's not going to bail out, but she did say they're going to do whatever they possibly can to save Deutsche Bank. Do you think they would move to doing bail-ins if this bank goes?
Well, that is the situation that is the $64 billion question, if not $1 trillion one. I mean, that's what she did effectively to everybody else. So what you've had the bonds going negative over there on 10 years, etc., because capital assumed that if the euro goes, they would rather have German than Greek or Italian or French, because they thought if the euro collapses, they'll get Deutschmark. Now the question becomes, does Germany blink? And if you're looking at a bail-in, you're looking at really a major crisis, because Deutsche Bank's the biggest bank in Germany. You're going to destroy the economy. And if she bails it out, then you're going to have everybody bailing out of the bonds, etc., and say, oh my God, maybe I better run to the dollar. So it's not a very good situation over there at all, because they've never addressed the issues of the faulty design of the euro to begin with.
I mean, Deutsche Bank has a very large derivative book. Do you think this would be like a chain reaction where it would affect other banks if this bank goes?
Derivative book is about 6 times the GDP of Germany as a whole. But, that's kind of like looking at the extreme side. What you really have to look at is really the net. And if it's what nets out on their own book is probably okay. It's the cross bank, if other banks have used it, but you'll end up in the same thing as like Lehman, and they'll start shorting it things of that nature. So I don't think it's as great as some of the people have explained, because you really have to look at the net off their books and between the banks. So yes, it could create a contagion, as we saw, coming out of '07.
So you mentioned that the EU, they're not doing so well. And we know that the ECB, there were negative interest rates. They've been buying corporate bonds. I think they're looking to buy equities. What else can they do? I mean, none of this has really helped, has it? Has it really helped the European Union?
Zero. I mean, this quantitative easing that everyone assumed, if the Fed did it, this is going to be hyperinflation, etc. It's just false dreams, because how do you get inflation? Inflation comes if the money's in the hands of the consumer. Mm-hmm. Fine, you bailed out the banks, but then look at what the banks did. They went to the Fed and they said, gee, we don't have anything to buy. You should pay us interest directly. Then they created excess reserves. Okay, fine. The Fed, monetized. Okay, but they have almost $3 trillion sitting there in excess reserves. So the money was never put into the system. If the banks had lent it to people, actually done something for the economy, that's one thing, but they didn't. They have hoarded money themselves. And so everything the Fed did really hasn't been a robust recovery. This is one of the shallowest recoveries ever since. And it's largely because of what the Fed did and what these central banks are doing.
I wanted to move here to the United States. You wrote an article about a pension crisis, and many people are out there talking about there's a problem with pensions. They're underfunded. When you say there's a pension crisis, what do you actually mean?
Most of your crisis is predominantly in the public sector. Mm-hmm. You have several states that have been lobbying. For example, California, Illinois, New York, and Texas were the leaders in behind the curtain lobbying effectively that what they want to do is seize all the private pensions, and then the state would manage that because they're broke on the public side. So it's always this Ponzi scheme. Obamacare. What was the real design of Obamacare? They were effectively going to fine any youth who didn't buy it, and they were looking at getting the youth to have to pay premiums for things they don't really need that would then offset the expenses for the other side. So it's always a Ponzi scheme that the government does. It's never an outright program per se, and that's why Obamacare has been failing, because first they put in a fine of $75. You said, well, $75 a year, okay, that's cheaper than $300 a month. Mm-hmm. But you just have these it's partly academics and partly people that are there running government have never worked in the private sector. They don't see it. They think all they have to do is write a law and you must do it. So as long as you're going to have people running governments like that and think their power is the pen, well, good luck. I mean, because the people do not necessarily do that. Does everybody drive 55 miles an hour down the road?
No. Maybe,
That's the answer.
Yeah. Let me ask you, gold right now is 13 and change, and we see gold has moved up since December of 2015, and, people are out there and they're talking about gold going to, 5,000, 10,000, whatever the number is. What is your forecast on gold? Where do you believe it is heading?
Longer term, all right, not within a year or two. But you look out further, then the maximum we could possibly come up with on gold would be really $5,000. That's it. And a lot of the gold promoters, they talk about 50,000, 100,000. It's just ridiculous. It's really, really absurd. And the bulk of the money that would go in gold is really just individuals, not institutions. Institutions can buy the gold stocks, but they can't really invest in gold per se because it doesn't pay a dividend. So that doesn't do any good for a pension fund. They need income. So a lot of the gold promoters are saying, oh, paper gold, etc. Well, those that did have gold, they leased it out to least, earn some income. So it's really a retail market more than institutional. So, gold will go up, but, it begrudgingly, largely because it's, the government has been hunting taxes everywhere. It's really, getting very bad. I know people that were in the, gold refining business and they've quit and gotten out because the government comes in and says they have to document every ounce where it comes from and where it goes to. They're tracking everything. So this is the hunt for money. The governments are just flat outright broke. And instead of reforming anything, it's like, just like, Hillary in the debate last night. What'd she say? Oh, we're going to tax the rich. Okay, if you took all the money from the rich, everything, Bill Gates' money, Soros, all of them, put it all together, it doesn't balance the budget for a year. So, fine, you're talking about, oh, he's worth $60 billion. We're into trillions. So how is taxing the so-called rich going to do anything? The money never gets to the middle class anyhow. It always goes into the politicians' pockets. And it's just never going to work. So unfortunately, this is the price of government. It's why Europe isn't recovering. You have a situation there where, fine, they monetize, but then they keep raising taxes. If I say, well, I'll lend you money at 1%, if you can't at least make 2%, you're not going to borrow and pay 1%. It's the difference between the two. It's not the empirical level of interest rates that matter. It's if you can make a profit. If I say I'll give it to you 10 and you think you can double it and make 20, you'll take it at 10.
It's funny you mentioned taxes, and if we think back to when they went ahead and implemented the income tax, didn't they tell us that they were only going to tax the wealthy, and that tax went to the middle class, and then it went to the poor? So that wealth tax most likely will end up hitting the middle class, then the lower middle class, and then everyone will be taxed once again.
Well, I'll tell you, I was in Australia. They passed the luxury tax. Mm-hmm. They pitched it as great, saying that they were going to tax the Ferraris, the fur coats, and the French wine. And everybody cheered, yeah, go get the rich. They passed it. What was in it? All electrical products. So, you went to go buy a TV, suddenly you paid a luxury tax. You bought a clock radio, luxury tax. They always lie. That's just simply the way it is.
That is true. So you wrote an article, The Coming Dark Age, and you had many different examples in there about the dark age. Now, when you say we're coming into it or we're in a dark age, what are you talking about?
Well, when historically you run into these dark ages where the corruption in government just becomes so pervasive that you can't reform it, and the whole thing just simply collapses. The example I gave, for example, like on Japan. Mm-hmm. Each emperor came in, and what he did, he devalued the outstanding money supply to 1/10 of his new coins. I mean, the coins were always just iron or bronze, so you weren't talking about, a precious metals, content to it. And so what happens is that eventually the Japanese realized, hey, the emperor dies, I lose 90% of whatever my savings are. So they started not accepting the coins of their own country. Chinese coins circulated and bags of rice. And eventually what happened was the Japanese government lost the right to even issue coins for 600 years. When the fall of Rome happens, it took effectively 600 years before you start seeing gold coinage come back. It wasn't until the mid 1200s. So you go to a point in time, what was, the feudal system? Why did that happen? Because the central government collapses, and then everybody just locally, create their own little economies to survive. So, this is historically, it's pervasive. It's happened in every economy. In Greece, you have the heroic period, with Agamemnon and Troy and all that. And then you go into a dark age. Then you come back to the period of the Hellenistic period under Alexander the Great. So, you have these periods where the danger is that it just becomes so pervasive and corrupt that the system completely collapses, and then you don't go back. You disperse. The term we have, suburbia, is Latin. It meant that they moved out of the cities and dispersed. So Rome, for example, in 180 AD, was the first biggest city in the world, had a population of 1 million. That fell to 10,000. People just walk away from their properties because they were taxing things dramatically, to the point you just said, fine, it's yours, goodbye, and they leave. And this is what creates a dark age. You lose the central power, the central control, and people then migrate out, and it'd be like the United States, all 50 states breaking up.
So do you think what we're entering a dark age, or are we in one?
No, there's a risk of this happening by probably 2032 on the other side of that. And it's just that the system has become so corrupt. Why did the founding fathers say no direct taxation, no income tax whatsoever? We had none until 1913. All right. It's because, it's a difference between liberty, and basically just being an economic slave. Everything you do, everything you earn, all right, you have to report to the government. You cannot legally mail more than $25 in the United States. Oh, that's cash. That you can't put cash in a safety deposit box. Read the fine print. That's money laundering. You're hiding money from the government, and they have to know everything you do. If you found $10 on the ground, where'd you get it from? My sister bought a house, and on the mortgage, she had to go through every check that she ever deposited in her account going back like 7 years. And my mother had given her some checks to buy, to pay, reimburse her for medicine or whatever. Every single check had to be explained. What was this for? What was that for? It's getting to be really abusive, and, it's everywhere. If you're leaving Italy and it looks like you have too much, gold jewelry on, they take you off to the side and weigh it. I was in Brussels in meetings with the government there, and I hopped on the train to run over for a meeting in London. I was pretty much the only guy in a suit and tie. Everybody else was in jeans and sneaks. I just was running over to get to a hotel so I could get changed. I'm the one pulled over by the customs in London. I looked at him. I said, "What?" He says, "Yeah, you come here." I said, "What's the, I said, he says, "Where'd you buy your ticket?" I said, "I bought my ticket in Brussels." I said, "I'm American, all right." I had to show where I bought the ticket because he was looking, did I really live in London as an American and was coming back and maybe with money? It's just nuts. You take a train from Zurich to Luxembourg, it goes through France. They stop the train and the French have police. They come through looking through everybody's bags, looking for money. They confiscated, $10 million worth of bonds from an Italian who was on the train trying to go to Switzerland. You can't have money anymore. If it's not declared, must be illegal somehow and they're entitled to it. They don't have to prove anything anymore.
Do you think this is happening because the system is breaking down and they're trying to get as much as they possibly can? I mean, the United States has FATCA, they have GATCA, and in the beginning of of us talking, you mentioned that they're trying to bring in more and more revenue. They're taxing everything. Do you think this is all part of the system breaking down and they need to go after every single person just to pay the interest on the debts?
Yeah, I mean, if you just read Edward Gibbon's Decline and Fall of the Roman Empire, it's exactly the same thing. That's why history repeats. I mean, human nature doesn't change. That's why it repeats. All right? Politicians, from ancient times, they said there's a politician under every rock. That's it. They take your money and they spend it and they squander it. They never give anything really back of any substance. And they just lie like crazy. They're up for sale. I mean, it's amazing. Like, and the press tends to be right in bed with them. I mean, it was the Clinton administration that removed Glass-Steagall. It was the Clinton administration that put in mandatory minimums that, now like up to 40% of black males have been in prison. All right. The Clintons are the ones that made student loans non-dischargeable and gave that to the banks. I mean, yet they stand up and say they were for everybody, other than the bankers. It's just amazing, but I mean, and nobody calls them out on anything, but that's the way it is.
So do you think from everything that you've been looking at, are we heading for another crisis?
Oh, yes. There's no question about that. We have, what is going to happen is effectively the markets are coiling. All right. Everybody keeps saying, oh, the stock market's going to crash. All right. When the stock market crashes, usually the bond market goes up. Money's got to go someplace. It runs from the stocks, goes to the bonds. Are you really going to take the money and go to the bond market and say, here, government, you can keep 10% just to hold my money? I mean, we've reached the bubble in bond markets. This is it. And so the markets are coiling. You have probably the vast majority of these analysts saying, oh, the stock market's going to crash, whatever. Retail participation's at historic lows. Mm-hmm. How are we going to get a crash like 87 or 2000 or 2007 if the retail public's not there? It's going to go up, not down. Because what will happen is when people finally realize this is really messed up and the danger is on the government side, not the private side, then you flip the other way around. You sell government bonds and you run into equities. Because, that is at least a place to park money. That's what the big money will do. And I had one guy say, oh, you're wrong. S&P is at historic highs at 23. I said, really? In 2000, the dot-com bubble, the PE ratio reached 50. But you know what the historical high was? It was 120. When was that reached? 2009.
So you're saying that there's going to be a bond collapse, not an equity collapse.
It's the bond markets that are really in serious trouble, because you can't go really effectively any lower in rates. And the crisis this develops is that all the pension funds, particularly the public sector funds, are effectively they're insolvent. It's really, they needed 8%, all right, to break even. They don't have the money. They cannot earn it. And then you take a lot of these countries, they mandatory make private pension funds and public pension funds invest in government bonds. Then you take interest rates to negative. I mean, this is honestly, it's like the Three Stooges running the world economy. I mean, you just look at them and you shake your head. I mean, this is why Janet Yellen has inherited a real nightmare. So she keeps saying, and people aren't paying attention to what she's saying. Mm-hmm. She said we have to normalize interest rates. Why is she saying that? Because she knows there's a massive default in pension funds on the horizon. And she keeps saying we have to raise interest rates. And everybody, oh my God, you can't raise interest rates. Everything will crash. If you don't get their interest rates up to normal levels, all the pension funds are going down. Social Security goes negative next year, and so is Medicaid. Social Security can only be invested in U.S. government bonds. They can't earn enough money to pay out what's owed.
When the bond market comes down, like you're saying, how bad is this going to be for like the everyday person? You know, the guy or the girl working on the street, having a job, having their pension. What's going to happen to those people? Like, what are they going to see? Is it going to be like 2008?
It would be more like the Great Depression. That's the last time you had a massive sovereign debt default. Because we're looking at government debt. I mean, they don't want to talk about that. That in the sovereign debt before that was in the 1840s. It was all the states that went bust. And in 1931, all Europe basically went bust, except Britain went into a moratorium, and they eventually came out of it. China went bust. South America went bust for the fourth time in a row. That's what made a Great Depression so great. You can take the stock market to 10 cents on the dollar. Mm-hmm. That's not going to create a Great Depression. Where is the vast majority of money invested? It's in bonds. So you destroy the bond market, now you're talking about destroying capital formation. It's not the stock market. The stock market's the fluff. But it's the bond market where all this money resides. If you just took what's in excess reserves at the Fed and the corporate cash, all right, you're talking about $5 to $6 trillion of cash sitting just there. Okay, can you imagine what the Dow Jones would do with $6 trillion? So there's two sides to every coin. Sometimes it's the private sector that collapses. Other times it's the public sector. We're in, unfortunately, a side where it's the governments that are collapsing. They have promised the moon. They've done nothing. These people are incapable of any kind of fiscal management whatsoever.
When the government collapses like this, like you're saying, and we have this problem like the Great Depression, people are going to lose jobs?
Sure. I mean, it's, job growth is not great right now because taxes are too high. They keep raising taxes and taxes and taxes. And, fine, Hillary stands up and says, oh, we're going to tax the rich. But they never say who are the rich. The rich is defined by the tax code as $250,000 household income. We're not talking about billionaires and trillionaires here. That's basically good luck, starting a small business with $250K.
So how long will this last, this collapse of government? I mean, it's not just going to be the United States. It's going to be worldwide?
Yeah, I mean, it starts outside. It's never going to start from the center. The United States will be the last to fall. This is why the dollar has been so strong. It's why the central banks lately, China, etc., they've been selling U.S. government bonds at the request of the Fed, trying to keep the dollar down, but it doesn't stay down because you have all the Chinese rushing to get out of there. They don't trust their government, so they've taken over practically the West Coast. Even from Vancouver, they've been one of the biggest buyers, highest ticket buyers in real estate in the United States. In Europe, you have the same, crisis over there. It's just not, feasible. So the dollar is the only reservoir left. And I can tell you, I mean, as you know, I do consulting with a lot of governments. So I understand what's going on behind the curtain. I'm there. And I can tell you that there is a lot of people now talking in Washington that the dollar should not be the reserve currency. That they realize that what's happening here is that the Federal Reserve can't raise interest rates so easily because they have the IMF and everybody else saying, oh, please don't do that. You're going to bankrupt everybody else outside the United States. So the Fed has become the central bank of the world by default. So how do you get your power back to manage your own economy? The only way to do that is to get rid of the dollar as reserve currency. But that's not an easy task. It can't be simply declared, all right, you can't use your U.S. dollar as reserve currency. You just, that's it. I mean, you can't stand up and declare it. The IMF has been trying to sell the idea of the SDR, but that's not a currency. It's basically a basket of currencies. I mean, you've had these people saying, oh, well, China is going to become part of the SDR on October 1st, and the dollar is going to crash. The SDR is a basket of currencies. It's not an independent thing. So part of the SDR, the vast majority of it is the dollar. So you got the British pound in the SDR. I mean, these things, and the euro's in there. They said the same thing with the euro. That didn't have any effect. It's a place where you're going to park money. That's what a reserve currency is. Can all the pension funds honestly stand up and say, yeah, okay, fine, we're going to buy Chinese government debt? No. If you're not at that level of trust yet, and their court systems, etc., can you really defend your money? We're not there yet. Eventually, we'll get there, but you're talking about a couple more decades.
When the dollar is no longer the reserve currency, what happens here in the United States?
I mean, what I argue for is that it shouldn't be the IMF, because the IMF is just a corrupt organization that has been bought and paid for many times over. And I think a brand new agency should be started, and what becomes the reserve is effectively a basket of currencies. But if we eliminate taxes, the income tax, and just went to a consumption tax, it changes everything. I mean, we have all this argument about immigration, all the rest of this stuff, and fine. What is the problem? The problem is that only Americans, citizens, pay income tax. So you can have an equal amount of illegal aliens, they do not pay income tax. So the solution is obvious. it should just be eliminate the income tax. Everybody pays a consumption tax. It doesn't matter where you're from. And all the studies show you would end up with more money in revenue than less. But you have people that just want to be able to punish somebody who earns more than they do.
From everything that you've been looking at, when do you predict the bond market to come down? I mean, do you have a time frame when you think this is going to crash?
It should start next year. I mean, we've been basically saying, look, we had 4 major elections, and this has been what we're saying. This is like a year from political hell. The first was Brit exit. The second one is the United States presidential elections. Then we have the French elections. Holland is below 10%. And then you have Merkel. And, Merkel's party's been coming in third now. Mm-hmm. So what you're looking at is by the time we get to the summer of next year, whatever you thought about the world, stability, politically, whatever, everything can be completely upside down.